Hi guys, welcome to my channel. My name is Hugo, and today we're going to see all the stocks that we're going to see in the screen. We're going to do some deep analysis, and others are going to be monthly, so I won't be doing so deep analysis. And we're going to see as well how the markets behave in the past week and what's going to happen this week. So stay around. So we're going to start the week with the NLE Capital Management. This actually already spoke about this stock in my previous videos. They are a diverse capital manager and engaged in mortgage finance and corporate middle markets. They have a dividend yield of 12.21%. It's the highest dividend yield that we have for this week. They pay quarterly in March, June, September, and December. They are undervalued 4.65%. The ex-dividend date is going to be on the 30th of March, so we still have time to buy it. And we have a financial health of a B, where we have, in terms of assets, around 11 billion, and in terms of liabilities, around 56 billion. We have a market sentiment of a hold, and the future growth is going to be minus 26.9, which is quite bad. And in terms of the past performance, it wasn't good as well. So besides the NLI has a high dividend yield, is going to be quite risky to invest in this company because the financial health is not the greatest, the future growth is not going to be the greatest, and the future growth doesn't cover, or I mean, the dividend yield doesn't cover the future growth of this stock. And have a look into the past performance, it went well. Besides the fact that the market went quite down during this past month, I think that being overvalued in 4.65% is not enough to cover the future growth that's going to be negative. So I do think this stock is going to be a little bit down in the next upcoming months, unless something has changed in the stock itself. The ticker CIM Chimera Investment Corporation is also a REIT, has the previous one. They have a dividend yield of 10.70%. They pay quarterly in March, June, September, and December. They are overvalued in 17.6%. The ex-dividend date is going to be on the 3rd of March, and they have a good financial health with 2 Gs, where they have around 12 billion in assets and around 3 billion in liabilities, with the market sentiment of an hold. The future growth is going to be minus 28.5%, and the past performance is 11.8%, so it's not good as the previous one. This is not in the best shape, besides having a better financial health. Is not in a good shape, and they are still overvalued. So for me, this is a no-go because of they are being overvalued, and this doesn't cover any. The dividend doesn't cover this. What you're going to lose in the price, in the fair price of the share. So that's why I think this is not a good. And the stock has been raising in the past week, but all the stocks have been raising in the past week since the market has recovered from the dip. The next ticker is NRZ, New Residential Investment. Again, it's another REIT, mortgage REIT. They have a dividend yield of 9.35%. They pay quarterly in March, June, September, and December. They are undervalued in 37.1%. The ex-dividend date is going to be on the 1st of April. And they have 3 Gs as a financial health, where they have around 21 billion in assets and around 12 billion in a liability, and there are more indicators that tell me that they are in a really good position in terms of financial health, and we have a market sentiment of a buy. In terms of the future growth, is going to be on 10.4%, which is quite good, having in consideration that the past wasn't the best and the stock went down. So I do think this may be a good stock to have on our portfolio. Not only they are undervalued 7%, they have a future growth of 10 and a dividend yield of 9.35%. They are really interesting stock, although I do have already Main Street Capital on my that pay monthly on my portfolio, and I don't have intention to have more REITs on my portfolio. Otherwise, my entire portfolio is going to be REITs, and I don't want that. I want to have the diversification. The next ticker is going to be STWD, Starwood Property Trust. They operate in the real estate investment trust. Again, it's another REIT in Australia, Europe, and the United States. They have a dividend yield of 8.03%. They pay quarterly March, June, September, and December, and they are overvalued 0.2%. It's not much, but they are still overvalued. The ex-dividend date is going to be on March 30th, And the financial health, we have a G, where we have assets around 12 billion and in terms of liabilities around 400 million. The market sentiment is going to be a buy, and the future growth, we have a future growth of 17.6%, and since the past performance was only 2%, so it's not bad. Having in consideration they are still overvalued. This could be with a minimum risk, I think. With overvalue, we may cover the future growth, may cover the overvalue. So this could be a good option if we don't have anything else. The next ticker, it's going to be BXMT, Blackstone Mortgage Trusts. So this company was created by Blackstone in order to avoid some federal income and for tax purposes. So they have a dividend yield of 7.86%. They pay quarterly March, June, September, and December. They are undervalued in 6.3%. The ex-dividend date is going to be on the 30th of March. The financial health is a G with around 22 billion in assets and around 177 million in liabilities, which has really good indicators. And we also have a market sentiment of an old. The future growth is going to be only 2%, and the past performance was 6.3%. So this is not a stock that has too much fluctuation, suffers too much fluctuation, I mean. And this could be a good option. We have a 7.86% of dividend yields. We have a good financial health, and with a average, a little bit below average, but average future growth of 2%. And the stock has been increasing in the past weeks. The next ticker is going to be MGM Group Property LLC. Bear in mind, this could be one of the stocks, since it's a LLC. They could charge you a little bit more in terms of tax. You may not be paying only the 22%. You may be paying a little bit more. Have that in consideration. They are a lending, publicity, and trading real estate investment trust, where they have casinos, hotels, convention, dining, and entertainment. They have a real big investment in Las Vegas, and have a dividend yield of 5.68%. And since COVID, they have not been great, and the stock now is starting to increase, although we are already seeing here a future growth of 7.5%, which is good. In terms of dividend yield, they pay 5.68%. They pay quarterly March, June, October, and December. They are undervalued in 41%, which is interesting. And we have an ex-dividend date on the 30th of March. The financial health is B, bear in mind 3 Bs. Is not being the greatest due to COVID, where they have around 30 million in assets and around 226 million in liabilities. So that's why they are don't have a great financial health. In terms of the market sentiment, we have a hold, and in terms of the future growth, as I mentioned before, 7.5%, and the past performance 39.5%. Venues are starting to open, and this may be the cause of the future growth being with a 7.5%. Although I do think this is still a medium risk stock. The next ticker is WPC. WPC carries Inc. They are among one of the largest REITs, with an enterprise value of around 80 billion, and with a really diverse portfolio. They pay a dividend yield of 5.27%, being one of the most conservative dividend yields that we have for this week. They pay quarterly March, June, September, and December, and they are undervalued to 57.6%, which is really good. In terms of the ex-dividend, that is going to be on the 30th of March, so we still have plenty of time to buy. And we have a financial health of 1G, where we have around 1 billion in assets and around 30 million in liabilities. In terms of market sentiment, we have a hold, and the future growth, we have a 16.5%, and with a past performance of 11.2%. The stock has been increased as all others, although as a really conservative dividend yield, but I think is a good stock with a low risk. Other stocks that we have for this week paying monthly, bear in mind these are stocks that pay monthly, which I don't do so a deep analysis, and some of them I do already have on my portfolio, which is AGNC with Investment Corp with a dividend yield of 11.03%. They increased this past week because they went down. The next dividend is going to be on the 30th of March. And then we have PSEC, Property Capital Corporation, which is one of the stocks that I had in mind to buy in the past, but then they were quite overvalued, and I decided not to go through, although they have a really high dividend yield, but the financial health wasn't so good. So they have a dividend yield of 8.83%, and the ex-dividend is going to be on the 28th of March. although you don't have time to buy this one. But since this is a monthly dividend, you may be able to buy the next one or have on your watch list for this month. Bear in mind the financial health and the valuation of this company is quite high at the moment. For me to invest in PSEC, I'll let the stock go down a little bit more. EPR Properties is one of the stocks that I have also in my portfolio. They have been increasing in the past. They have a dividend yield of 6.25%, and the ex-dividend is going to be on the 30th of March. Also, and one of my favorite stocks this week is going to be Main Street Capital with the ticker MAIN, which pay a dividend yield of 6.15%. It's the lowest, but it's stable and has been paying every single month. Bear in mind that EPR didn't pay during the past crash, so they didn't pay any dividends, and Main Street Capital did pay, so it continued paying every single month. Main Street Capital has also more market cap than actually EPR, but I decided to invest in these three stocks just to have more diversity. And in conclusion, for the Main Street Capital, the ex-dividend date is going to be on the 1st of April. So the past week, the markets were a bit better for us, and especially for me. Finally, I've got positive this week, and the overall it's positive with I'm thinking with a positive trend to finish this month at least, which will cover the drop that we had in the past few weeks in the market, especially in February. Although we had a really big increase this week, with the market going up around 3 points in each on the SP500 and on Nasdaq. But we have still the Chinese market, which affect me a bit, not so much because this represents in the total around 5% of my total investment in the Chinese market, so it didn't get too affected. But although it's 5% that pushed my portfolio a little bit down. In terms of the last week's sectors, the most impacted sector was actually the energy sector. We had the increase, and this is due to the gas and oil with the war that we are having here in Europe on Ukraine. So and this got really affected, where the energy sector went quite up a lot, not only because of gas but also because of crude and oil. And being the most affected, the biotechnology with a minus 2.16%, and all those companies that I have on my portfolio got affected. Like for example, GlaxoSmithKline and Pfizer, they got affected, which they operate in the biotechnology sector. So they didn't went up this week. Here we see the overall stocks HeatMap, where we can see Google has an increase of 4 points this week. And bear in mind that the past week we're not seeing anything green, was completely red, everything was red. We had Apple with an increase of 6.55%, and that's why I managed to sell one of the stocks that I had with a bit of profits, with around 3.50%, because my goal was to buy Amazon in order to get more stocks in Amazon. As soon as Amazon will do the split in July, I do think this stock will skyrocket, as the same thing it happened with Tesla and other stocks that they had the splits, because there are a lot of platforms that people can't buy Amazon because they need to buy at least one stock, and that stock will cost them $3,000, so they don't want to do that. So that's why with the splits we're going to see probably an increase on Amazon exponentially. The same thing it happened with Tesla, and Tesla here it went up actually quite a lot with 11.62%, which is quite interesting. But although I still think that Tesla is still quite overvalued, as we see here, the energy sector, we have Chevron and Exxon with an increase because of gas and oil, and we have also here in the financial sector Berkshire Hathaway with the increase. All the other banks, companies, probably they're going to be affected a bit because they loan money to the Russian government, and they probably won't see that money coming back soon. So that's why we are seeing here some depreciation on the financial sector. So now let's do some market analysis of the SP500 and the Bitcoin. So in terms of the SP500, during this week we may see here a fall of around 6.51%, but we are in a consolidation place. So we are seeing here we're not going back to the 41, which is going to be the support. We are seeing this going back. We are seeing here RSI calls for a rebound, so we are being undersold, so probably this is going to increase in the next upcoming week. So that's why on the beginning of the week probably we'll see a fall on Monday or Tuesday, but then we're probably going to finish with a positive trend for Friday. In terms of the Bitcoin, and we are doing here only analysis of 1 day, but the prediction for the week probably is going to be the same, depending on the also what's going to happen on the SP500, which we're going to have a rebound, and probably here we're going to see the same thing, a rebound. But we may see a fall of 3,200 to 8,200 pips, with a key resistance over on the 45,000, which is going to be this resistance over here that we have already tried to test several times, but it didn't went. Although we have here a really good support around the 38,000, and with average that we have here, I don't see this going to fall. So probably the next drop that we're going to see is going to be between the 40 grand to 39 grand. Okay guys, I hope you enjoyed the tips for this week. Don't forget to hit the subscribe button and the like. Once again, if you want me to go in more deep analysis in one specific stock, let me know in the comments, and I'll try to respond to you as soon as possible, or even include in my next upcoming video. So guys, thank you, cheers, and see you next week.